I'm okay
How's
today.
your daughter?
Yeah, today she's at work. Yesterday she was at dialysis. So yes, so it's like that. One day at a time we have to take it up.
Yeah, but
Yeah, right. Yeah, we are
right.
we are almost. I mean, as far as the money is concerned, we are ready now. At least 50% we are ready, but then we have to find a donor. Yeah, we have to
Yes,
get.
that's good. Yes.
Yeah, that is what we have to now. We are praying about a donor, as a person who could give her a kidney.
Okay. So
Yeah.
you find the person who can donor?
Yeah, no, not yet, but we are testing some people because it has to match also. So they are testing at the moment, and so they will confirm who is fit enough to go to the thing. Not that everyone,
Okay.
not that everyone will fit. Some people will fit, some people may not fit. So we have to wait and see.
Okay.
Okay, so let's start off again. I'm still on the throughput accounting. You remember we were discussing the throughput accounting yesterday, day before yesterday. So let's talk about it little bit quickly today. Also the throughput accounting. So we said throughput is an accounting system, not really a costing system, but it is an accounting system. So throughput basically means somewhat similar to marginal costing. Only thing it has, it is very useful to make long-term decisions, and also if you want to increase your production capacity, all that kind of thing. It is based on three concepts. The three concepts we discussed, the throughput. What is throughput? Throughput is basically sales minus material cost. You remember? Throughput is
Yes.
sales minus material cost. So
Yes.
that is what we call the throughput. What is contribution? Contribution is the marginal cost in sales minus variable cost. So that's the difference between the contribution and the throughput. So in the throughput, it is the sales minus material cost. And then we spoke about the inventory. Inventory is all what we have in inventory, what is not sold. So raw materials, work in progress, finished goods, all that, and plus even the property, plant and equipment which is used to get the throughput is considered inventory. Raw materials, work in progress, finished goods, and even property, plant and equipment which is used to create the throughput is called inventory. Then we saw something called operating expenses, which is sometimes called the conversion expenditure. That is the expenditure that we incur to convert the raw material into a finished good and to sell it. Raw material that is converted into finished goods and to sell it is what we call the conversion cost. So they are direct labor, fixed overheads, variable overheads, plus selling expenses. So this is what we learned the other day. So they are the
Yes.
they are the three concepts which the thing is working. So managers must aim to increase the throughput while trying to reduce the inventory and reduce the operating expenses. So that is the way you can make a profit. Reduce the inventory, reduce the operating expenses, increase the throughput. So that is what the manager should be trying under throughput accounting. So the throughput, we said, it is the only cost that is related, or that is only cost related as a variable cost is the direct material cost. That's all. No other cost is considered in the throughput. In the marginal, hello. Hello, hello. Hello, hello.
Yes.
Yeah, sorry.
Some mistake.
Yeah, right, okay. Right, it's all right. So, direct material cost is the only cost that is considered variable. But in the marginal, we see direct labor, variable overheads, and even selling expenses are considered selling variable expenses are considered variable expenditure. But here, no, only the material cost. So that's the other difference we saw. Then all other costs, including labor, deemed to be fixed. And that is more right, I think, nowadays, because most of the labor cost is fixed today, unlike those days. It is something that is being fixed. So I think what they say is probably right in that scenario. Right. So then these fixed costs are called total factory cost. So that is all the cost that is fixed are called total factory cost. Right. Then the throughput contribution is revenue minus not total variable cost. Yeah, it's in a way total variable cost, but for the throughput contribution, total variable cost is only the material cost. Right? Only the material cost.
Right.
So the aim of the TP is to maximize this measure of throughput contribution, and throughput is revenue minus direct material cost. So the conversion cost we discussed. So the material cost and other manufacturing cost. So only cost is direct material. All the other cost, all other manufacturing cost, that is including direct labor, factory overheads, all that is called conversion cost. Conversion cost. So direct labor, factory overheads, the fixed overheads, variable overheads, all that is called conversion cost. So the depreciation, rent, electricity, water, everything comes under the category of conversion cost. Right. So then we learn the investment. So the investment is what we call the inventory. The investment is raw materials, unused raw material. Anything sold, it's already sold. Right? Raw material, work in progress, finished goods, and also non-current assets such as property, plant and equipment, which are used to create the throughput. Whatever that is used to convert the raw materials to sales is considered investment, and that is called the inventory. So your vehicles that takes the goods to distribution is also inventory, right? And research and development that we incur to improve sales, to improve product quality is also considered investment. So investment is property, plant and equipment, R&D, and all inventory. Inventory is raw materials, work in progress, and finished goods. So everything is considered investment. Then we realized operating expenses. So operating expenses are everything that we incur to convert the raw material into sales. Everything that we incur to convert the raw materials into sales. So all that is direct labor, variable overheads, fixed overheads, plus selling expenses. Plus selling expenses, plus admin expenses, everything is considered operating expenses. So operating expenses are not purely fixed costs. They are costs that are not totally variable. So there are some costs what we call semi-variable cost, semi-fixed cost. So you remember we discussed this, your internet cost is a semi-variable cost. Up to a certain point it is fixed, but beyond that if you go, you have to pay more. So that is also in this setup, it is an operating expenditure. So it's very important that you remember in your throughput accounting, when you say operating expenses, it's not only variable, not only fixed cost, even semi-variable cost. Only cost that is excluded is the direct material. Direct material is the only variable cost. Anything partially variable, partially semi, considered altogether. Right. So profit reporting in throughput accounting, we saw if you have a revenue, only the raw material we take it 200, then the throughput is 550, operating expenses 400. This operating expenses includes direct labor, variable overheads, fixed overheads, and selling expenses, and also admin expenses, everything together 150,000. So that is how your net profit is included. But if you look at the marginal costing, your net profit will be slightly different, 750, but you will have not raw material, you will have the variable cost, but that is direct material, direct labor, everything, maybe 400. That includes direct material plus direct labor plus variable overheads, and the figure what we get is 350, what we call the contribution. Here we call it throughput, here we call it contribution. And from the contribution, we have to remove the fixed overheads, maybe 150 fixed overheads, and also maybe another 50 for selling expenses. So you arrive at the same profit 150, but two different accounting methods. Two different accounting methods. Here you take only raw material cost, take the throughput and deduct all the expenses, and you arrive at net profit. Here you take the direct material, direct labor, variable overheads, what we call variable expenses, arrive at contribution, deduct the fixed overheads, deduct the selling expenses which are fixed, and then you arrive at profit. So the two total different concepts of accounting. If you look at the absorption costing, it will be 750, and you may have direct material, direct labor, variable fixed overhead plus variable overhead plus fixed overhead, right? Maybe 150. So 550. Then you arrive at something called gross profit 200. And maybe selling expenses are 50. You arrive at the same profit 150. So you can see either way you will arrive at the same profit so long as you produce the same quantity and sell the same quantity. The problem comes up when there is balance inventory. The profit can change when there is balance inventory. If you sell all what you produce, whatever the way you use it, ultimate bottom line will be the same. But three different presentations. Throughput will show the net profit 150. Marginal costing will show a net profit of 150. Absorption costing also will show a profit of 150. But three different presentations. But if there is inventory, the whole thing will change. The whole profit figures will change. So this is sometimes called super variable costing. Another name for throughput is super variable costing, right? So it is not really true because in the throughput you don't have something called a product cost. There is nothing called a product cost because they don't consider it as a product till it is sold. So there is no value addition to the raw material till it is sold. So TP is calculated, but no attempt will be made to charge operating expenses to the product. So you don't have to portion the overhead, so you don't have to allocate the overhead. You just take it as it is and try it. Okay. So this is what makes the TP different from absorption costing and marginal costing. Right. So that's one. Then let's look at the next one. Inventory valuation. So in TP, the inventory is only valued at the purchase cost of the raw material. You may have improved it, you have done the packing, you have done the wrapping, everything, but if it is not sold, sorry, you can't take it up, right? So it's only valued at the raw material cost. But in the marginal costing, it will be valued at the variable cost. In total costing, it will be valued at total cost. So no value is added to the production until the item is sold. That is the theory. So with that one, we discussed yesterday, this particular example, we discussed it and we found the three different methods of profit, what we got in three different areas, because when there is inventory. So again, let's look at that. Yes. That's same thing what we were doing yesterday. So yeah. So what they did was they had producing 1,000 units, selling 800 units, and they sold 800 units for 8,000, and the direct materials 3,000, direct labor 2,000, and
Fixed production.
yeah, and fixed production overhead 1,000, other overheads 1,000. So 3,000, 2,000, 1,000, and 1,000. So let's again look at that same example what we worked it out yesterday. So what they said was direct materials 3,000, direct labor 2,000, fixed overheads 1,000,
1,000.
and variable overheads 1,000. Correct?
Yes.
And they produced 1,000 units, sold 800 units at the rate of 10, 8,000.
8,000.
So first of all, let's look at if we apply the absorption costing system, how will our profit be shown? Absorption costing system. So sales are 8 into 10 into 800, 8,000. 8,000 sales, right? Then
Yes.
we have direct materials 3,000, direct labor 2,000, factory overheads 1,000, variable overheads 1,000. So altogether we have incurred 7,000. Right? 7,000. So we produce 1,000 units, incurring 7,000. So we know if it is only one product, we know the overhead absorption rate is 7 per unit. 7 per unit. Right? So not the overhead absorption rate, total cost per unit. Total cost per unit is 7 per unit. 3,000, 2,000, 1,000, 1,000, 7,000. 1,000 units produced, 7 divided by 1,000, it is 7 per unit. Now, how much inventory left over? 200 inventory left over, correct?
Yes.
You produced 1,000, you sold only 800.
800.
So because of that, your total cost 7,000 should be reduced by the value of inventory. Value of inventory is 7 into 200, 1,400. So
yes.
your total cost of sales is 5,600, and you will have a profit made up of 2,400. That is what we saw, right? 7,000 is your total cost, 1,400 is the value of inventory. Now let's look at if you apply the marginal costing, what is going to happen. Sales still 8,000, but there we will take the direct materials 3,000, direct labor 2,000, not the fixed overhead, but we will take the variable overhead 1,000. So 6,000. So there the 6,000 is your total cost incurred. Total variable cost incurred 6,000. But we have incurred 6,000 for 1,000 units. So we can find the value of inventory here. It is 6 is the variable cost per unit. 6 into 200, 1,200. Right? 1,200.
Yes.
So you reduce the value of inventory by 1,200 and you arrive at 4,800. Right. 4,800 and you end up with a profit of 3,200. Yeah? 3,200
Yes.
is your profit. So that is what 8,000, 4,000, 3,200, this is what we call contribution. But this is not good enough. We have to remove the 1,000 fixed overheads and we arrive at profit of 2,200. Right? You have to remove the 1,000 fixed overhead, because here we have the direct material, we have the direct labor, we have the variable overheads, but the fixed overhead we remove it from the contribution. Here we remove everything from the total production. Then we can go for the throughput accounting. If you go for the throughput accounting, sales are 8,000 still. Still 8,000 sales. But only you take the direct materials 3,000, right? Direct materials 3,000, but we have incurred 3,000 for 1,000 units. So the direct material, the value of inventory is 3 per unit. There's 200 units left over. 600 minus 2400. This we call throughput. This is what we call the throughput, right? You have 3000 incurred, but there's a closing inventory of 600. Remove that one, you get your throughput of 5600. From here, we have to remove all the other expenses, what we call operating expenses. So what are the operating expenses? Direct labor 2000, fixed overheads 1000, and variable overheads 1000. So 4000 we have to remove it. So we can say the profit here is going to be 1600.
600.
So can you see the three types of profits that we are getting? Same sales, same expenditure, but we get 2400 in this one.
Yes.
Yeah. Will you give me a second?
Okay. All right.
Hello. Morning, Mr. Swayas. Mangataro kole den no nede. Manada karane? Alright, mama එක කරන්න. මේ number එකට WhatsApp කරන්න පුළුවන් නේද? I'll do that man. Okay, sure. Right. Okay, I'll do that man. Yes, mama එක කරන්න. Right, okay, right. Thank you. Right, මම කරපු කමාට SMS එකක් කරන්න. Okay, thank you. Take care. Right, God bless you. Right. So you can see under absorption cost in 2400 profit. Marginal cost in 2200 profit. And under throughput 1600 profit. What is the difference? Only difference is in the way that we have valued the inventory. Isn't it?
Yes.
It is only the value of the inventory that is going to make a difference. Not anything else. So that is very important that we understand that one. So it is only the inventory valuation that is going to make a difference in your profit. Otherwise, it is a presentation difference. Here we have a total profit, what we call the gross profit. Here we have a contribution, and from the contribution we remove the fixed overheads to get at the profit. Here we get the throughput, and from the throughput we remove all the operating expenses to get at the profit. So these are the three methods what we learned yesterday, right? So now
yes.
We are going little beyond this one now. Okay. So we, whenever, bottleneck. Whenever we try to do some business, we have some bottlenecks. The biggest bottleneck that normally we have is, what is the bottleneck? What limits your capacity? You want to do a business. What can come and put a block on you? You want to reach the sky, but you can't reach the sky. Why?
Yes.
Why can't you reach the sky? What is the problem? What can block you? Right here, you and I will start a business. But what can block me and you reaching a billionaire?
Okay.
What is that? Can you think of anything? You and I.
Competitor in this.
Pardon?
In the marketplace, there is competitor.
Yes.
Your product.
Okay, good. That is because you have a competitor. What happens? Your demand for the product will be somewhat reduced. Somewhat. So that can be a constraint on you. That can be a constraint on you. And that is what we call a bottleneck, which is going to stop me going beyond. Otherwise, every business will reach the, some level. But because there are competitors, because there are other products in the market, because there's a certain demand for a product, right? You can't produce anything more than that. Useless producing.
Yes.
Right? So even you may not have a competitor. Let's forget about a competitor. Let's assume that you are the only You are the only man who is producing some product, right? Maybe what? Chicken, right? You are the only man who is producing chicken in the whole world. But how many chicken can people eat? Isn't it?
Yes.
So that is going to restrict your production, because after right, you can eat one chicken, maybe you can eat 2 chicken, but you can't eat more than that. So if there's 6 billion population, you can produce 12 billion. That's all. But beyond that,
Yes.
useless. So that becomes a bottleneck. So the first bottleneck that we find in the market is the market demand.
Yes.
Then, okay, let's assume that you have a market demand. Okay, you have a big market demand, but still there can be few other things which can come and block your way of doing things. Yeah, what are the other things? What are the other things that can block you?
Yes.
Demand will block you, right? Okay, let's assume that you have a big demand, but you can't do it. Why? You may be short of people, isn't it? Labor,
Yes.
right? You may not have enough people to work for you, right? Not that everyone is willing to work in a chicken factory. So you may not have enough labor, right? You may not have enough machine.
Yes.
Enough
All are
Yeah.
limit, yes, capacity. Yes.
Yeah, that's right. Right? You may not have enough machines. You may not have enough enough space. Enough space, because you have to keep all the chicken inside your place.
In the store.
Stores. Yeah, you don't have enough space, so that can be a bottleneck. You might have all these things. You can find all these things, but you may not have enough money.
Yes.
So any of these things can become a bottleneck. So whenever there's a bottleneck, we have to identify that bottleneck. What is going to stop me reaching the sky? What is going to stop me not being able to do? So having decided on that one, we have to decide, what am I going to do with? I must try and remove that bottleneck, right? So maybe the market is the problem. In that case, I must see whether I can eliminate the competitor. Maybe my problem is I don't have enough people. So I must see whether I can employ some casual labor, whether I can employ some outside people. Maybe my machine.
It will cost you.
Pardon?
It would cost you also.
Yeah.
You hire some other
Exactly.
people from outside.
That's right. You have to consider the cost and see whether it is worthwhile to hire them.
Yes.
You may want to buy a new machine because my demand is too much. My one machine is not good enough. I need 2 machines. So, but you don't have a machine in the world, maybe. Or maybe you have the machine in the world, but you don't have money. So you try to identify that bottleneck, and then you must try and see whether you can remove it. Some bottlenecks you can remove it, but some bottlenecks you can't remove. If that bottleneck cannot be removed, that's a very valuable resource. That is what is going to block you, right? So that should be used very, very efficiently. Now you are studying for the exam. One of the most valuable resources you have is what?
What? Time.
Time, yeah, that's right. The time can be a bottleneck for you. So you must use your time very, very efficiently. You must not waste your time. You should not waste your time on non-productive work. You must not waste your time on doing something which is not going to bring you a profit. So time.
Yes.
So that resource must be identified, and that must be used to the best possible optimum level.
Yes.
So first of all, everything will be revolving around that resource. So we know in a manufacturing environment, sales can be the block, raw material supply can be the block, labor can be the block, machine hours can be the block, finance can be the block, anything can be a block. Right? So we have to find out what is going to block me. Okay, raw materials is going to block me. It is the raw material. I can do enough sales, I have enough labor, but I can get only so much of raw material. Raw material is limited. So I must try and maximize my output on the basis of the raw material. So every decision will be focused around this resource, raw material.
Yes.
So raw materials, you have only raw materials to produce only 1,000 units. You have available raw materials only to produce 1,000 units. So you may have labor for 2,000 units. You may have machines for 2,000 units. But we should not plan to produce 2,000 units. Because we can't. Because we have raw materials only for 1,000. So we must plan our non-bottleneck resources like labor, like machine, within the constraint. Within the constraint. Either we must try and remove the constraint. If I can get another 1,000 materials up front, it's all right. But if I can't get 1,000 material up front, I must try and reduce the constraint. I must try and work around the constraint. I can't ignore the constraint and think, oh, I have 2,000 labor hours. I have 2,000 people who can produce. I can do it. No, I can't. So because of that, the non-bottleneck should not be used to produce more than the bottleneck can absorb. If the bottleneck can absorb only 1,000 units, don't plan for 2,000. Because you can't do it. Unless you are going to remove the bottleneck, if the bottleneck is with you, you must try and work around. That is what the throughput accounting is all about. You identify the bottleneck. First thing you see whether you can remove the bottleneck. How do you remove the bottleneck? You try to see whether we can increase that labor hour. We can see whether we can increase that material availability. We try to see whether we can increase the finances available. If you can't do that one, work around the bottleneck resource and schedule every other thing according to the bottleneck resource. That is what you should be looking at. Okay? So,
Yes.
So let's look at whenever we have to make multi-product decision making. So first one, that is multi-product means you are producing a product A and a product B. Two products. You are producing two products. So when you are producing two products, we have to decide what is the bottleneck constraint. So let's assume that we are going to produce product A and B, and which is going to have a selling price of 10, selling price of 15. Let's assume the material cost is 5 per unit, 7 per unit. So here we have 5 and here we have 8 throughput. That is the throughput we have. So let's assume that we have the 10, 5 and 15, 7, 8. And let's assume that our total fixed overheads or the operating expenses, let's assume our total operating expenses are 200,000. 200,000 total operating expenses. And let's assume we can sell how many units? 50,000 units of A can sell, and can sell B 25,000 units. Can sell B 25,000 units. But let's assume for all these things to do, we have labor. Labor is our constraint. We have labor only, shall we say we have only 200,000 labor hours. 200,000 labor hours. So that is our bottleneck. We can't go beyond that one. And let's assume that A is going to take 3 hours of labor. A is going to take 3 hours of labor. And B is going to take, let's assume, 4 hours of labor. So if we want to maximize this demand, we can sell 50,000 units. So 3 into 50,000, that is, if we can produce 50,000 units, we can sell 50,000 units. A. So but to produce 50,000 units, we need 3 into 50,000 labor hours. Correct?
Yes.
Because each unit is going to take 3 hours. So to produce A, we need 3 into 50,000 labor hours. 150,000.
Yes.
150,000. And the B, each unit takes 4 hours, and you can produce 25,000. You can sell 25,000. 100,000. So 250,000. But we have labor only 200,000. So we can't do everything. We have a bottleneck. The bottleneck is the labor hours. We are short of 50,000 labor hours. So first thing we must try and do is whether we can get additional 50,000 labor hours. So we will try. Okay, how much it is going to cost? Will it be worthwhile? No, it's not. I can't get 50,000. In that case, I must try and maximize my throughput on the basis of labor hour. So let's look at this A unit. A unit is going to give you a throughput of $5. But to get that $5, that my valuable resource, what is my valuable resource? The labor, right? The gold. My gold. My gold is labor. Labor, I need to get this $5, I need to use 3 hours. 3 hours of labor. So for my gold, that is my valuable resource, I can get how much? $1.67. Every time I use $1 labor hour, my valuable resource, I can get $1.67 if I produce A. If I produce A. What happens if I produce B? Can you tell me?
Unfortunately, I cannot understand this $1.6. This one for A.
Okay. Yeah. Let me explain. The throughput is $5. 10 minus 5. Okay.
Okay.
10 minus 5. So I told you what is my valuable resource? What is my bottleneck?
Yes.
What is my bottleneck? In this case, what is going to stop me from producing 250?
50.
No, yeah, what is that? What is that? That is labor. Isn't it?
Yes. Yes.
It is labor, right? Because
labor hours.
Because I can sell 50,000 units, I can sell 20,000, 5,000 units, but to do that, I need to sell A, I need 150,000 labor hours. I need to sell 25,000 B, 100,000 labor hours. So 250,000, but I don't have that.
Yes.
So because of that, that is my bottleneck, and that is what I call my gold resource. That is the valuable resource for me. I must use that resource very carefully, very efficiently, right? So when I try to do that one, what I find is, okay, if I produce 1 unit of A, I get a throughput of $5. That is sales minus material cost, $5. But to get that throughput, I have to use 3 hours of labor.
Yes.
3 hours of labor. So this is what I'm saying. So that means if I divide that 5 by 3, I get a contribution of throughput of $1.67 per hour.
Okay.
Is it clear now?
Yes, now clear, yes.
Yeah, 1.67. If I produce A, I get a throughput of 5, but to get that 5, I need to use 3 hours of my labor, which is my scarce resource, which is my bottleneck. Yes. So for every hour of labor, I get the throughput of 1.67. Right? Now let's look at the product B. Now let's look at the product B. What is the throughput?
4 by 8, right?
Yes, 8 by 4. Isn't it?
Yes, 8 by 4.
8 by
yes.
4. $2.
$2.
Now can you see, when I use that my scarce resource labor, right, I can see if I produce A, I get only 1.67. But if I produce B, I get $2.
$2, yes.
So if you were the manager here, what will be your decision?
2.
2.
$2.
Yeah, first of all, you want to produce this. So your ranking will be this number 1. This will be number 2.
Yes.
Right? So I can get $2. So because of that, I will first produce the B. So, but B,
Yes.
I can't produce 200,000 units because the demand is 25,000.
Yes.
Right? So I will produce B 25,000. Right? B I will produce 25,000. So to produce 25,000, how many labor hours it will take? How many labor hours it will take to produce 25,000 units? Because there's a demand of 25. So my ranking is B. But now I must see how much of my gold resource the labor will go for that. Each unit is going to take 4 hours. 4 hours. So
Yes.
to produce 25,000, how many hours it will take?
100.
100,000 hours.
Yes.
100,000 hours. How many hours left over?
So
How many hours left over?
100.
Another 100. Because you have only 200,000, isn't it? So with that,
Yes.
with that 100,000 hours, how many units I can produce A? Because now I have satisfied the demand of B. Correct?
Yes.
Right? If I produce anything more than 25,000, useless because I can't sell it. So I don't need to produce it. So I have satisfied the maximum demand for B. But having maximized the demand for B, still I have my gold, my labor, 100,000 hours.
Yes.
That 100,000 hours, I can produce the next rank product, product A, which is going to take 3 hours per each unit.
Yes.
So with the 100,000, how many units can I produce? 100,000, how many? 100,000, how many units can I produce? Every unit is going to take 3 hours.
33.
Yeah, 33, 33, 33, 333, isn't it? 33,
Yes.
330. That's all you can produce. Even though the demand is 50,000, you can't produce because you don't have enough labor. So you produce A 33,333.
Yes.
And that is at 3,000, another 100,000 gone. So that is your way that you will plan your production. Understand?
Yes.
This is what
Yes.
the throughput is going to help you. So you will produce 25,000 units. When you produce 25,000 units, you get a throughput. The B, you can produce 25,000 units because that is your maximum demand. 25,000 units you will produce, and it will give you a throughput contribution of 8. So 8 into 25,000, the product B will bring you 200,000 contribution. And that's all you can produce maximum, you will produce that amount. Product A, although the demand is 50,000, you can't produce 50,000, you can produce only 33,333. Correct?
Yes.
And that is going to bring you a contribution of 5 per unit. Not a contribution, a throughput of 5 per unit. So 33,333 into 5 is your contribution. Is your throughput. Is your throughput, which is 166,665. So your total throughput, what you can get because of your restriction, 366,665. Correct?
Yes, sir.
366,665. Your total operating expenses are 200,000. Right? Total operating expenses are 200,000. So you can expect a profit of 166,665. Is it clear?
Yes.
Right? So what did we do? What we did was we first identified the bottleneck, and having identified the bottleneck, we calculated the throughput contribution per each unit of product. First of all, that was 5 and 8. Then we calculated the throughput contribution for the bottleneck, which was 1.67 and $2. Then we ranked the things, number 1, number 2. Then first of all we produce the number 1 up to the maximum demand. You are not going to produce anything more than 25,000, useless. So you produce. Having produced that one, we found, okay, 100,000 labor hours gone. Still I have another 100,000. With that, I will go and start producing the rank number 2 product. I can't produce all, but I produce to the maximum availability, and I produce that one and put it up. So when you do that one, you get your throughput contribution. So this is what, so basically that is what you should understand it. So step 1, first of all, what did you do? We calculated, we identify the bottleneck constraint, which are the labors.
Yes.
How did we know that one? Because we saw the maximum demand was 25,000 and 50,000. To do that one, we need so much of labor hours. So we have only 200,000 labor hours. We realized that is the constraint. So that is what the bottleneck is. And then after that, we calculated the 2P contribution per unit of the product. So that is simple. Selling price minus the material cost. Then having done that one, the next step was the most difficult one. 20 minus 15 was 5. But here it was taking 3 hours of labor. So 5 divided by 3, I said it is 1.67. 1.67. Right. Here we had 8 and it took 4 hours. So we divided 8 by 4 and we said 2. And therefore this is better. For my goal, it is going to bring me a $2. So this is rank 1. This is rank number 2. And having done that one, I used that ranking to do the production. So first I produced this one to the maximum demand, which is 25,000 units. And then I started with the balanced labor available, producing the maximum that I can produce. The maximum that I can produce, not the maximum demand. The maximum I can produce, I produced it and planned it. So what it says is basically, you don't plan to produce more than 33,333 of product A. Useless, because you don't have enough bottleneck resource. So don't try to think of hiring a big warehouse. Don't try to think of buying more material, because you don't have enough labor. Unless you can increase the labor, stop it.
Yes.
Unless you can increase the labor, stop it at that point. That is what it is all about, right? So this is what, this is the most important thing. You are sure to get some questions in this area. So we will be looking at some questions later on. Now I'm coming to something new, which is called the TP ratios, the throughput ratios. So I'm going to look at this one now with you. Throughput accounting measure. So return per factory hour, the first one. So we look at the total throughput contribution divided by the product's time on the bottleneck resource, right? So total throughput contribution, product times product's time on the bottleneck resource. Then we have the cost per factory hour, which is the second ratio. So these ratios are very important. I'm going to work out on examples on this ratio, and then we arrive at the what we call the TP ratio, which is the third most important ratio, right? So these are the 3 very, very important things that we need to know about this one. So let me work out an example with you to explain this these 3 ratios for you. So let me look at an example for you. Yeah. How to get the throughput calculation through the ratios. So explanation of the ratios. Yes. Let's take an example. Yeah. Give me a minute, because I'm trying to get an example to work with you.
Sure.
Yeah? Okay, so let's look at an example. Like, I want you to write down this in a little piece of paper. for you to understand it. So let's assume that right. Yeah, just collect a piece of paper. I want you to write down that one. Right. So here there is a product which is going to take 1.5 machine hours.
Just let me take pen.
Yeah. 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 Okay. Are you ready?
Just 1 second.
Yeah. Okay. Right. Okay. Right. No problem. It's all right.
Yes.
Right, okay. So I want you to write down. Machine time is the bottleneck resource and each unit takes 1.5 machine hours.
Just a second.
So they have identified the bottleneck resource as the machine hours, and the machine hours, each unit takes 1.5 hours. So they have 10 machines. There are 10 machines in the factory, and each can do 40 hours per week. 40 hours per week. So in other words, there are 400 machine hours. Right? There are 10 machines. Each machine can do 40 hours, so 400 machine hours. Right? And they are producing a product which can be selling price is 85. And the material cost is 42.50. Right? Operating expenses are 80,000 for a week. So this is the information they are given us. So the machine hour is the bottleneck resource, right? Each unit takes 1.5 machine hours. Selling price is 85. The material cost is 42.50. They have 10 machines, 40 hours each machine, so they have 400 hours. And the total operating expenses are 80,000. So this is the information they are given us, and they want us to calculate the throughput ratio. So to calculate the throughput ratio, first of all you must calculate the return per factory hour. Return per factory hour, that is the number one ratio. So that one, first of all, calculate that one. So that is calculated throughput contribution. What is the throughput contribution? Throughput contribution is 85 minus 42.50. 85 is the selling price. Material cost is 42.50. Throughput is 42.50. Right? So 42.50 is the throughput. Divide that by product's time on the bottleneck resource. So how many hours it is going to take to produce one of these units? 1.5 hours.
Yes.
So the throughput divided by the bottleneck resource hours will give you the return per factory hour. Right? So in other words, every time I use that resource, I get a return by producing that one throughput contribution of 42.50 divided by 1.5, 28.33. $28.33. That is what I call the return per factory hour. How did I get that one? I took the throughput, divided by the machine hour, which is the bottleneck resource. Right? For every unit, I found it out. So in other words, I know every time I use one machine hour, which is my goal, which is my scarce resource, I get a $28.33 contribution. Then I calculate the cost per factory. Cost per factory hour. So the total factory cost, they say
400.
How much? The total factory cost, they say 8,000, not 80,000, 8,000. Total factory cost is 8,000. 8,000. And total time on the bottleneck resource, right? They have how many machines? They have 10 machines, 40 hours, 400. So that gives you the cost per factory hour, $20. In other words, that you have $800, $8,000 to recover, and for that you have maximum bottleneck hours 400 hours. So in other words, every hour that you lose, you must recover $20.
Okay.
$20. So now you can call the throughput accounting ratio. So return per factory hour 28.33 divided by 20. Return per factory hour divided by the cost per factory hour, which will give you 1.42. 1.42. So what does this tell us? Right? What is it telling us? When they say your throughput ratio is 1.42, what is it telling us? Now that's the important one. So the moment you calculate the three ratios we calculated, first of all we calculated the return power, second one we calculated the cost per hour, and with that one we have got the TP ratio, which is 1.42. Right? So first of all, let's look at the return per factory hour. What it is telling us. It is telling us the value that is being added by the organization, right? By using the bottleneck resource. So, management must encourage people to increase that return per factory hour. So if they want to increase the return per factory hour, what they must do? They must increase the throughput. How to increase the throughput? They must try and increase the selling price or reduce the material cost price. By either doing that one, you can increase the throughput. And then if you want to increase the return per hour, you must try and reduce the bottleneck hour. So you must be more efficient using the bottleneck. If you can use it without using 1.5 hours, if you can do it in 1.25 hours, still better, isn't it?
Yes.
So that is what the return. So as a factory manager, you should be looking at this 28.33 and see how I can improve that one. How I can improve that one. So that's the first ratio that is going to look at. So the next one is the cost per factory hour. The cost per factory hour. So that you must try and reduce it. As much as possible you must try and reduce it. So the way to reduce is you must try and reduce this cost. So look at every factory cost, direct labor, direct factory overhead, this, that and the other. See how you can reduce it. Or how you can increase the number of machine hours. If you can add up another one machine, 10 into 40, 11 into 40, this will get reduced, isn't it? So try and increase the machine hour. So that way you can reduce this figure. Better you reduce the figure, it is better for you. And then finally what you get, the throughput accounting, the throughput ratio. So that tells us the return what we get from a product from running the cost of the factory, right? So the people can argue it and say the product with a greater than 1 TP is good, right? Because the return is made at this point less than the cost of producing the net return. So the 28.32 you are making, and the 20 is the expenditure. So you are doing better in terms of if you get a TP ratio more than 1, right? But
yes,
on the other hand, let's look at another ratio. Maybe your return is 2. Your return is 2, but you are spending 4. So you get a throughput ratio 0.50. 50. So you can probably think and say that okay, the 1.42 is better than the 0.50, which is true. Which is true, but it all depends on the individual product. Here we have a product which is just going to cost you $4 and it is going to bring you $2. This product is going to cost you $20, it is going to bring you 28.33. So this is, even though it may seem this is better, it may not be really, because here we have a smaller product, little investment, which can bring bigger volumes.
Yes.
So the throughput accounting ratio less than 1 or more than 1 may not explain the full story, but still it explains some part of the story. We must try and maximize the throughput ratio. But there may be, it will be difficult for you to compare a throughput ratio product of 0.50 and a throughput product of 1.420 unless they are same equal product. If they are same equal products, then of course, surely the higher the TP ratio, the better that company is. But two companies producing two different products, here I spend 4 and get a 2, here I have to spend 20 and get 28.33. So maybe it's good for me to, maybe it's good for me to get the 4. Let's assume because the 4 is, for 4 I get 2. So if I spend 20, how much do I get? I get 2 into 5, 10. Isn't it?
Yes.
Right? 10. But here I get 28.33. So maybe 1.42 is better. But still for all, it all depends how much I can invest, how much I can put it up. So this is what the throughput accounting ratios are. So basically, we have now understood the throughput. So first thing, you calculate the return per factory hour. So the return per factory hour, what you look at is the throughput contribution, that is the selling price minus the material cost is the throughput, divided by the product time on the bottleneck resource. How many hours it takes to produce one unit. So in this particular case, we saw it was going to take, first of all, 1 unit. The first part of the 1 unit. 1.5 hours, isn't it? The first part of 1.5 hours. So the 1 unit. So this gives return per factory hour per unit. So the throughput contribution of 4250 divided by 1.5, we got per unit the contribution, which was 28.33. 28 point. This is the total cost. This one is the total factory cost. This one is the per unit cost. So the total factory cost is 8,000 divided by the total time on the bottleneck resources, 400, which gave us 20. So what we found was okay, 1 unit is going to give me 28.33, but it is going to take $20 of my bottleneck resource. So from that one only I found for every bottleneck resource I use, I get a throughput ratio of 1.42. So that is what we need to know about the throughput accounting measure. So this is a very sure question. I want you to understand this one very clearly. You are going to have a couple of questions on this area in your OT question. Yeah. Right.
Stevie, I need more questions that I can understand more and more.
Yeah, that's right. So next session, that is what I'm going to do. So the relevance of TP ratio. Right? So the return per hour shows the value added by the organization, and managers are encouraged to maximize this. So that is the TP divided by the bottleneck resource. So you must try and improve the TP or try and reduce the time that you take on the bottleneck. So that is why we train the people. That is why we give people new training method to reduce to make them more efficient. Right? So increasing the throughput or by reducing the time taken. Then the cost per factory hour, so the cost of operating the factory in terms of overheads, etc. The TP ratio measures the return from a product against the cost of running the factory. So the return per hour and the TP ratios are product related, whereas the cost per factory is the company as a whole. So this is for the total company. The second ratio is for the total company. The first ratio is for the product.
Yes.
So what are the criticisms on TP? So the TP is criticized. It is basically, although it can be used long-term, mostly it is a short-term measure. You look at in terms of very short term. right? Because you don't try to improve the resources. You are trying to manage the limited resource in the maximum way, in the best possible way. So that way, sometimes you might forget that your long-term plans of improving the resource, right?
Yes.
And therefore, it may be somewhat counterproductive to apply it on long-term basis. So in long-term basis, they believe A-base is more appropriate, activity-based costing is more appropriate than TP. Because TP is generally, what you are trying to do is you understand there is a shortage of a particular resource, maybe labor, maybe machine hours, and you try to work around that one, rather than trying to see how I can overcome that problem. So you may be very much short term, and that may not be good for a company. But in the short term, this is more relevant. So I think ABC is more long term, whereas TP is more short term. So,
yes.
So that is what we need to do. Right. So basically, with that one, I have reached the end of the TP accounting. So what we are going to look at is, we are going to look at some questions in our next session to understand this area much more better.
Yes.
So let's see whether we can fix up some lessons next week. How are you on Saturday 18th, Sunday, or what is your program?
Yes, I'm free also.
Yeah.
You have more earlier than this time, only like around 30 minutes.
Yeah, I can do it. I can do 30 minutes early. So I can even do it at say 8. Now we meet at 9 o'clock. No, we can do it at 8:30 on Saturday or Sunday.
Yes, that's okay.
Shall we do it Saturday 8:30?
Yes, no problem.
Okay, so shall we make it Saturday 8:30, because I can do it at 8:30. So let's meet on Saturday 8:30. I'm going to look at some questions in the areas what we have done already.
Yes.
So I'll say,
I'd like to have more for TV, this one.
pardon? Yeah, that's right. So definitely, because there are a lot of questions in this area. So Saturday 18th, we will look at some TP question areas, and I'll send you the questions in advance. You can take a printout and keep it. And so we will look at some questions at Saturday 8:30.
All right.
Okay, so I'll meet you on Saturday 8:30, Sam.
Okay.
Okay,
Right.
take care. Bye.
Sure.
Bye.
Okay, take care. Bye.
Bye. Bye.
Yes. Have a good weekend. Yes.
Yes, bye.
All right. Thank you. Bye.